realize that if you protect the ocean, you protect yourself. That is our mission at Ocean Country Society. And I'm glad to say that to honor my father, my family, and all the people who we are, us, to be where we are today. But there's a lot more that needs to be done, and I believe we can. Otherwise, I wouldn't be doing what I'm doing today.
To every single one of you here. Thank you so much for joining us. It's great to see so many, not old faces, but friendly faces, and lots of new people too. And I'd like to give a really warm welcome to our colleagues and friends from China, because it's the first time they've been out for a long time. So it's great to have them with us. So we've got a nice, short, sharp programme for you tonight. We've got a great party at 7 o'clock, so I'm going to make sure we stick to time. And we've got two speakers, and I'm going to introduce the first one now. His name is Sumana Rajarthan, and he's the Southeast Asia Director of the Economist Intelligence Corporation. Now, Sumana will present tonight a macroeconomic global and regional outlook, revealing current economic trends and future expectations, and provide actionable business insights for all our attendees. Ladies and gentlemen, please join me in welcoming Sumana to the stage.
All right. Thanks, Alison, for that. Let me just put my bottle of water down. As she said, I'm going to take you through a global economic outlook, and then very quickly through some of the regional implications of that, and then look at some trends and drivers that will lead to opportunities and risks in different sectors. But this is a travel industry crowd, so I'm going to begin with a little anecdote of which I feel many of you would have experienced, and it's my story of a taxi driver. My first trip after COVID, after all of that, I was very excited. I'm based in Singapore. I was going to KL, and so I called a taxi to take me to the airport. Got into the taxi, of course he asked me, taxi drivers are very chatty, what do you do? So I said, well, I go around, I deliver these speeches, I talk about economic and political outlooks and the business environment, and I was very impressed with myself. The taxi driver turned around and said, you guys get things wrong all the time. You tell me that Trump is going to win, he loses. You tell me he's going to lose, he wins. You tell me that China is going to crash, it's doing so well. You tell me that inflation is coming down in Singapore, I can't even buy a chicken from the market. So, just want all of you to channel your inner taxi driver and look at my presentation with a good healthy dose of skepticism. Now, These are the 5 things that our analysts are looking at that are driving the global economy for this year. So they are top of mind for all of us. I'll spend a bit of time on this slide. That headline is, in the near term, the global economy seems to be in better shape. And look at point number 1, we are somewhat more resilient than we thought we were about 6 months ago. 6 months ago, when we were sitting down and we were doing our forecast, we thought that Europe would be in a sort of shallow recession. We thought that there was quite a lot of risks in the US market as well. But so far this year, the EU and the US have avoided recession. Growth is flat there, but still that is better than stagnating or a recession. And why is that? Well, part of it is that Europe got its Energy Act together very fast. And the winter was relatively mild, and so they didn't face that energy crunch that was expected sometime in August or September last year. And then the other one is China's consumer rebound, right? So China came out of COVID very quickly. It took 2 months. A lot of us, or I imagine all of us, came out of COVID, and in each of our countries, it generally took around 3 or 4 months, but China really bounced back very quickly, and it bounced back somewhat unexpectedly as well. When our analysts were doing their forecast for the year in August or September last year, we didn't think that China would rebound so quickly and open up so quickly, and that has had a massive effect on the global economy. Now, the second point is on inflation. We never used to talk about inflation and interest rates being so high, but unfortunately, that's the world that we are in. I'll talk about the prices of hard and soft commodities, and also what that renewed demand from China opening up means for us, and why we think inflation will last for another 5 years. The good news is that people are still spending, so a lot of the recovery is consumer driven, right? So GDP growth in a lot of South Asian economies has been consumer driven. That's certainly the case in China as well. There's also a pretty tight labor market. Unemployment is pretty low. And that means that we will see people still spending as well. Geopolitics and protectionism, we sit in Southeast Asia, all of you are in Singapore today, that will always be around. But there are some interesting shifts in terms of defense and energy and changing trade routes that I'll go through to explain why that's important for the region. And as I mentioned in my first point, the return of China, I cannot emphasize how important this is for the region, especially this year. And I have some interesting facts and figures about that. This is our map of the world. Each hexagon represents a country. So you can see North America on your left, and then Europe, and then towards the right you can see East Asia and Southeast Asia. And the colors on the map essentially represent GDP growth. So the more red or yellow those colors are, that's about 4-6% growth, so that's healthier growth. And those more tepid blues that you see are lower growth. So you can see what I mentioned in the beginning, North America, a lot of light blue. We are looking at growth of around 1% for the US. In Europe, many light blues, so that a few of those were in darker colors before, but there's not going to be a lot of growth, about 0.8% for the region, so essentially stagnant. But as you come to this region, a couple of things to point out. You can see India, Thailand, Vietnam, China, all in those sort of orange, yellow, and red colors. One very important thing is China. You can see that that's in red. We forecast China growing at around 6.1% this year, so a big bounce from last year. Last year, China grew at about 3%, which was its lowest rate in 20 years. And why is that important, right? On the top there, we've raised our global forecast for global GDP growth to 2.1%, right? Modestly, it's a very kind of modest figure. Over the last 20 years, global growth has only been below 2% twice. One was during the global financial crisis, and the other one was during the first year of COVID. So while I said in the beginning that we are seeing a bit of resilience to the global economy, I think we should all just take a little bit of time to pause and reflect what that number means. But of that 2.1%, 40% of that growth is coming from China. So the overall contribution of global GDP growth this year from China is 2/5. That's massive. Compared to Europe and the US put together, those two regions are going to contribute about 20% of global growth. So that's to underline how important China is, not only for the global economy as one of the few economies that is growing very quickly this year, and it's a big economy, but also how that affects the region that we are in Asia Pacific. Now, I have lots of charts on these, and this chart is an interesting one. It's the same numbers as the chart before, but grouped into regions, right? So to give you a bit more of a comparison between the regions. I have 3 years of growth, so that dark blue is 2023, light blue in the middle is 2024, and then 2025 is yellow. So you can see world growth slightly improving over the next 3 years. You can see the US and the Eurozone kind of flat and then improving in 2025. And then two things to call out. One is China with a big bounce back this year. You can see that it's 6.1%, and then it falls slightly. But then APAC, the region that we're in, and most of you, I expect, a lot of you in the room are based in the region as well, or have business interests here. What's important about that is that growth in APAC is fairly consistent. So you can see it hitting sort of that 4.5% level across the next 3 years. And that makes it a bit easier for business planning and forecasting your own types of business needs. So I think that's the story that I wanted to do, that kind of comparison between the different regions. Commodities. So this is the different types of commodities, and I have a bunch of squiggly lines up here. On the left, I have hard commodities, which is industrial raw materials. And I could have put a bunch of different materials there, but I've put metals, fibers, rubbers, and IRM weighted index there. Now, what's important here is the shape of these different types of hard commodities. You can see that that line starts from 2019 to 2024, so there's a bit of a forecast aspect to it. And you can see that during COVID, it really spiked, and then it went higher when the war in Ukraine started. And then prices are starting to come down. So that black dot is about where we are now. So you can see from that black dot towards the right where the prices of hard commodities are going. So they will stay elevated. You can see that those lines are much higher than they are in 2019, so not coming down to pre-pandemic levels. On the right, we have soft commodities, so things like sugar, oilseeds, beverages, things like that. And those are things that you plant in the ground. Harvest cycles are about 6 to 8 months, so they tend to react a bit faster. So you can see them coming down more quickly. Now, our view at the EIU, as you can see, is that prices will remain elevated compared to pre-pandemic levels, and that's because our central forecast for the war in Ukraine is that it will last for another 5 years, and that really kind of drives our forecast here. It won't look like it has over the last 12 months. It will probably wind down in intensity, but still be a low-level conflict. But that's why it's related to the next slide, which is that we do think that inflation will take a little while to come down. So here are inflation numbers for some of the biggest economies in Southeast Asia. And I have the monthly figures on the left and the quarterly figures on the right. And what you can see is that right now inflation feels pretty high. That's the graph on the right. But as we look into the future and into the end of 2024, we do see inflation coming down pretty substantially. So they will remain sticky. It will come down. Inflation last year was globally at 9%. We think it'll end up this year at about 7%, and then next year at about 4%. So pretty sticky as these price pressures remain. Now, very quickly on China, I did say how important China was for the global economy. This is China's growth until the end of the decade. You can see it moderating slightly. And the story in China is that it is a very big economy already. And so there's a secular change where the Chinese economy is slowing down. The Chinese economy and the Chinese government is also trying to implement policies called dual circulation, where they essentially try to push growth more internally in China compared to relying on an export model. So that's why we see growth coming down in China towards the end of the decade. But we have to remember that it will be a huge economy by that point point in time. So still very, very important. A lot of focus on India this year for a couple of reasons. One is that India is the chair of the G20. And another reason is that sometime in April this year, India became the biggest country by population in the world. And so sort of a psychological effect drawing attention to India. When I talk to clients, they have two things to say about India. One is that the opportunities in India are mouth-watering. And the other thing that they say is that the opportunities in India are eye-watering. And there's good reason for that. A lot of the business environment and doing business in India is difficult because of how difficult it is to transport goods around the country. We do see in this chart here is essentially our business environment rankings for India. And as you can see, we do think that over the next 5 years, the business environment in India will improve quite significantly, especially when it comes to their tax regimes, when it comes to foreign trade and exchange, making it easier to move money around, and also some investments that they're doing in infrastructure. There's also a huge labor market in India. About 100 million people will be added to the workforce over the next decade. But while that headline figure is really bountiful, the truth is that only about 50% of those 100 million will actually enter the workforce because female labor participation is very low. Nonetheless, India, we forecast, will grow at an average of about 6% for the next decade. And that will really change the way India feels and looks and its sort of economic heft as well. So here are some of the trends to watch out for. Very quickly on geopolitics and investment destinations. This is a graph from the early 2000s to about 2027 and FDI coming into different countries. So that dark blue is ASEAN, Southeast Asia, the light blue is China, and then that yellow-orange part of it is India. And as you can see from that line on top, pre-COVID trends of FDI are going to change. So there's quite a lot of money flowing into the region. But also, if you look at that dark blue portion on the bottom there, that becomes bigger through to 2027. So we expect a lot more FDI into ASEAN as well. So that's kind of the overall trend. And in Southeast Asia, and I'm sure in many other parts of the world, we are very attuned to the rivalry between the US and China and what that means for trade especially. And while there have been sort of made in China tariffs, the Trump administration also had a lot of tariffs, and now the Biden administration has all sorts of different types of non-tariff and tariff barriers. One of the regions that has really benefited from this is Southeast Asia. And that's shown on that chart on the right there, which is actually my favorite chart, right? So with all of these changes to the tariffs, redirecting supply chains and redirecting trade around the world, it was expected by the US initially that the regions that would benefit would be South America and the Middle East and Africa. But in effect, Southeast Asia has been a big beneficiary of these changing trade patterns. So you can see on top there, Cambodia's trade with the US has increased by about 250%, Vietnam by 160%, Indonesia and Thailand by about 80%. So that's in the last 4 years, that's an incredible amount. But with a big caveat, right? So if you can see those little dots that are to the right of that graph, that's the actual size of the trade, right? So Cambodia, of course, almost nothing is traded there, 0.4% of US trade. But the big one here is Vietnam. And also to caveat that, the bottom of the graph there is China, and you can see that China's bubble is 17%. So 17% of US trade exports to the US is from China. And so, I think there's a bit of a cognitive dissonance with all the diplomatic and political rhetoric that goes around. Trade with the US and China was at record levels last year. And we do see that pattern winding down a little bit, but China being still a very significant portion of US trade. This is about transition policies and energy policies. So they are essentially a difference between the medium-term story and the long-term story for energy transition. Before the pandemic, before all those prices of raw materials went up, which is that little graph on the right with the lines, that's the metal prices, which are inputs into renewables. The energy transition and the transition towards renewable energy was proceeding at a very fast pace. Now, of course, not only with the pandemic increasing prices, but also with the war in Ukraine, many countries in Europe just had to get energy wherever they could, at whatever price they could, and whatever color it was. And so there's been a little bit of a slowdown in the short term in terms of that energy transition. But now there's a geopolitical discount on the energy transition, right? Countries have seen what has happened in Ukraine. They no longer want to be tied to an autocratic regime for their energy needs. And so we've seen that transition now speeding up as we go into the medium term. And we do think that especially in Southeast Asia, there's a lot more opportunity for renewables over the medium term. All of those numbers that I've given you, that 2.1% for global growth, growth in China at 6.1%, are based on our central forecast. And of course, to pacify all the taxi drivers, we have to have our upside or downside forecast, right? So what are the top 10 risks for the global economy? So what might change our central forecast? Usually this slide is a mix of good news and bad news, but unfortunately, given the environment that we're sitting in, most of these are downside risks. And I'll talk about a couple of them. One is that conflict erupts between China and Taiwan. That's not our central forecast. We don't think that there'll be a deliberate invasion by China into Taiwan. But as it happens with increased political rhetoric, with spy balloons flying over the US, with speakers of the House visiting Taiwan, that rhetoric does get built up to quite a heated level. And what happens is that both of those countries, China and the US, tend to react with more naval exercises, more military exercises, and more posturing. And what can happen then is that an accidental event in the Straits of Taiwan. So a ship hits something and trade is disrupted for a short period of time. So that's one of the risks that we see to the global economy. And the other one is extreme weather, right? So the National Oceanic and Atmospheric Agency in the US has now said that there's a 90% chance of El Nino happening this winter in North America, and there's a 50% chance of that El Nino effect being a severe one. And so we do think that that could have an effect on commodity prices. We've already revised some of our prices upwards. And if that happens, Southeast Asia, of course, will be affected, along with many other regions as well. So that's something to watch out for in terms of a downside risk. This is a slide that I will end on. So this is a fairly interesting slide. It's our long-term forecast for the global economy. So what we have on the left here are the top 20 biggest countries by their economic size in 2020. And so you can see the US on top there. China is the second biggest economy, followed by Japan. If I direct your eyes right down, you can see Indonesia there as the 16th biggest economy in the world in 2020. Now, using our forecasts, that changes. In 2050, we predict that China will be the biggest economy in the world. India will be the third biggest economy in the world. And then some surprising countries up there. Vietnam comes in there at about 15th place. Bangladesh is the 19th biggest economy in the world. Now, of course, some caveats here. This is based mostly on demography and what we think government policy will be. And of course, I don't expect any of you to question me in 2050 whether I was right. But some of these economies might still be relatively poor from a per capita basis, right? So they'll be big overall, but they still might be developing economies from a per capita basis. I'm talking about Bangladesh and Vietnam, for example. And so to sum up very quickly, we are sitting in Asia. Asia's growth this year, we think, will be at about 4%. That's higher than the global average. We are living in this world of high interest rates and high inflation. We're not really used to it. We're coming to grips with it, and that we think will persist. Commodity prices, as I said, because of the war in Ukraine, will not come off their highs for another 2 or 3 years, but they will sort of moderate as supply chains realign. And then the green and digital transitions, we think, while there was a pause, will continue apace in the medium term. And with that, I thank you for listening to me and hand it back over to Alison. Thank you very much.